Hello, everyone, and welcome to the Beyond Wealth Advisors July Economic Update. I'm John Cleaver, CEO and Private Wealth Advisor. Joining me today is my friend and financial advisor, Scott Hawker. Welcome, Scott.
Thanks, John. I'm excited to be here.
Well, let's jump right in. If you've been watching the news lately, you've probably seen plenty of reasons to worry. The war overseas, questions about inflation, a new Federal Reserve chair, political headlines. Yet despite all of that, the markets continue moving higher. So today we're going to talk about why. We'll discuss what's happening in the economy, what we're watching, what it all means for the long-term investor. So Scott, let's start with the economy because it continues to surprise people.
John, if you only watch the headlines, you'd probably think the economy was slowing dramatically. But that's not what the numbers are telling us. Growth has actually picked up this year. Businesses continue investing, consumers are still spending, companies are still hiring.
You know, one of the biggest drivers continues to be artificial intelligence. And we're not just talking about ChatGPT or software anymore. We're talking about real infrastructure.
It is fascinating to watch. Billions of dollars are being invested in data centers, power generation, semiconductors, cloud computing. Those investments create jobs. They improve productivity and they support growth throughout the economy, not just in technology.
You know, that's a very important distinction. AI isn't just changing technology companies, it's helping manufacturers, healthcare, financial services. Really, every industry is becoming more efficient. That's one reason we're seeing such strong corporate earnings.
Another interesting story is the consumer. Overall, spending remains healthy, but there's definitely a split developing. Higher income households continue spending at a strong pace. Lower income consumers are feeling more pressure from inflation. That two-speed economy has been with us for a while now, and it's something we'll continue watching.
Fortunately, from an economic standpoint, the higher income consumer still represents a significant portion of overall spending. That's helped keep the economy remarkably resilient. Now let's shift gears. There's also a new Federal Reserve Chair, Kevin Warsh. Should investors expect major changes?
Probably not. His communication style may be different, but the mission stays the same. The Fed is still focused on inflation, employment, and economic stability. And remember, the chair doesn't make decisions alone. There are 12 voting members on the committee. Policy is still based on data.
That is easy to forget. Sometimes we get caught up in one person or one meeting or one headline, but investing is much bigger than that.
And that's the key point. Right now, the economy is healthy. Inflation is improving, although it's still above the Fed's target. That's why most expectations are for interest rates to remain steady through the rest of the year.
You know, one thing that's impressed me is how resilient corporate earnings have been. Despite higher rates, higher energy prices, and plenty of uncertainty, companies continue to deliver.
That's because today's economy looks very different than it did 20 years ago. Many of the largest companies require less energy. They're more efficient, and they have stronger pricing power. They're simply better positioned to handle periods like this.
You know, another positive is that market leadership is broadening. You know, earlier this year, it felt like, a handful of tech companies were the only thing moving the market. That's really changing.
Technology is still leading, but industrials are participating. Healthcare looks attractive. Consumer discretionary is improving. That's exactly what we'd like to see. A broader market is generally a healthier market, and it's another reminder why diversification still matters.
So let's talk about commodities, especially oil. That was one of the biggest concerns earlier this year, and with today's news that the ceasefire has broken down again, it's back in the headlines.
It is. Whenever tensions rise in the Middle East, energy markets pay attention. We've already seen oil prices move higher today as investors react to the renewed conflict and concerns about supply disruptions.
So does that change our long-term outlook?
Not necessarily. The situation remains very fluid. We'll be watching developments closely over the coming days, but we've seen this before. Geopolitical events often create short-term volatility, especially in oil. Long-term prices, however, are usually driven by supply, demand, and global economic growth, not just the latest headline.
You know, that's exactly why we encourage clients not to make investment decisions based on breaking news, because history reminds us over and over again, markets recover, before the headlines do. We've seen it after wars, recessions, after elections, and after every major financial crisis. Markets are always looking ahead.
And that's why we encourage clients, don't invest based on headlines, invest based on your goals. Headlines create volatility, fundamentals create long-term returns. That's a very different distinction.
Yeah, so let's finish with a fixed income conversation. After several challenging years, bonds are becoming attractive again.
John, today's yields are at levels we haven't seen in quite some time. Higher yield bonds continue providing attractive income. Investment grade corporates look appealing, and municipal bonds remain an excellent option for many taxable investors. Bonds are once again doing their job, providing income and helping stabilize portfolios.
Absolutely. So one last topic, the midterm elections. Clients always ask, should I change my portfolio because of the politics?
Our answer is almost always no. Markets have performed well under both political parties. In fact, history shows periods of divided government have often been positive for investors. Will there be volatility? Absolutely. There usually is, but that's very different from changing a long-term investment strategy because of an election.
So here's our takeaway. The economy remains stronger than expected, corporate earnings continue growing, the Fed remains patient, and inflation continues moving in the right direction. Fixed income is once again creating meaningful opportunities.
There will always be another headline, another election, another geopolitical event. But successful investing has never been about predicting every headline. It's about staying disciplined, following a plan, and keeping a long-term perspective.
That's exactly what we're focused on every day at Beyond Wealth Advisors, helping clients make thoughtful decisions so you can stay focused on what matters most. Thanks for joining us, and if you have any questions about your portfolio or financial plan, please do not hesitate to reach out to your advisor. We'll see you again next month.